Welcome everyone to our webinar for today. Please remind to remute yourself and turn off your cameras. Also consider switching your view to speaker rather than gallery view. If you have any questions during the webinar, please don't hesitate to put them in the chat box. Also, I'd like to thank our cornerstone sponsor, Lock Lord, our self-serve sponsor, Armanino, and our chapter sponsors, Harney Partners and Norton Rose Fulbright. Without them, this wouldn't be possible. Also, if you have a colleague who you think might benefit from being involved in TMA, please reach out to them and let them know there's a risk-free 90-day trial membership where they can participate in our events. There'll be a link into the chat box below. Also, we have our first in-person meeting coming up on March 3rd, which will be a happy hour in San Antonio at Corey Hoffbauer and Beer Garden. I look forward to seeing people in person for the first time in a while. Also, our first in-person lunch meeting will be on March 31st here in Austin, Texas, with Ryan Ragnar at Greenberg Turret, where we'll be discussing modern issues in the bankruptcy courts regarding the Texas two-step, the Purdue, and other bankruptcy reforms. Many of you are probably like me and have a monitor up watching the news as it comes in and the situation developing in Europe. Unfortunately, the crisis will probably reach our shores here in the not too distant future. Most likely, food prices domestically will reach crisis levels. If you're interested, I've begun a fundraiser to raise money for this Central Texas Food Bank, which you can contribute to below. That will also be linked in the chat. One last thing is this webinar will be recorded and disseminated on our website. You can access the link to the website to see the other recording as well. And without further ado, I'll turn it over to David Phillips to continue the webinar.
Good morning, everyone. Thank you for participating. We have two guests this morning, Alex Mazer and Barret Arthur of Big Shoulders Capital. Big Shoulders Capital is based in Chicago. They have a national footprint. For the past 15 years, Big Shoulders has been operating in our industry. A little bit about Big Shoulders Capital. Big Shoulders is a family office that makes debt and equity investments in underperforming and lower middle market operating companies across the United States. The mission of Big Shoulders is to be the most trusted acquirer and lender to businesses in transition. The principals at Big Shoulders have significant experience in machinery and manufacturing, as well as equipment lending and the auction business. Big Shoulders is open to a variety of structures: inventory loans, accounts receivable loans, working capital financing, equity investments, bridge loans, DIP facilities, note purchases, bank loan refinancing, acquisition refinancing or financing, and an array of flexible options for commercial and industrial asset-based funding solutions. Big Shoulders is a trusted partner to workout bankers, restructuring and turnaround consultants, debt placement brokers, attorneys, bankruptcy advisors, factoring companies, and lenders who want to exit a credit for a variety of reasons. So our basic structure is some opening comments from Alex and Barret. All participants are invited throughout the presentation to put comments in the chat box. Dylan and myself will, at appropriate times in the presentation and in the discussion, ask the question. So please liberally chat to the whole group or to Dylan or myself directly. So without further ado, we'd like to introduce and kick off our time with Alex and Barret. Alex, if you would, please start us off with just a history of Big Shoulders, the evolution of the firm. Be a great place to start.
Sure. So thank you, David and Dylan. We really appreciate the opportunity to join you guys today. As you mentioned, David, we spend most of our time in the distressed industrial world. To your point, it's all over the country. The chairman of our business got started in the machinery world, buying and selling used machinery. He ultimately built and then sold out of a large used machinery dealer. And at the time, got into the full-time industrial auction business, which is an incestuous sort of business. His stepfather was sort of the original guy doing it, and that was how he was introduced originally to the business. And so we today still have a very active industrial auction business called PPL, where we either act as a buyer or in some cases an agent on behalf of banks, companies, turnaround advisors, receivers, assignees, things like this. And it's a business for us. It's national. We do roughly 50 transactions of this sort a year across a variety of industries. We, in the last 10 plus years, formalized a business called Big Shoulders Capital, which originally had the goal of providing capital to privately owned industrial businesses that otherwise couldn't source more traditional capital. And it's gotten us into a number of wonderful opportunities across a variety of industries. And again, it's all about helping businesses with a source of capital that they otherwise may not have access to. And we've been active across the country, including in Texas, which we'll talk a little bit about, a couple sort of micro case studies. And then more recently, we've sort of expanded intentionally and proactively to our offering by proactively having an equity business. So the Big Shoulders Capital business is not limited to a debt product where we're either buying or originating loans, but we also own and operate a couple of manufacturing companies. And we'll talk a little bit about those. And so what we do is sort of come into the distressed industrial opportunities with a blank sheet of paper. And we're not limited to the auction business, we're not limited to the lending business, and we're not limited to the quote unquote private equity business. And start off with a blank sheet of paper and try to tailor a solution for the various stakeholders, depending on what it is that we think and collectively think makes the most sense.
That's great. And maybe Alex or Barret, talk a little bit more about what the firm has been doing more recently. You know, across those spectrum and those product offering, what in the last 12 or 18 months are you seeing that the market needs more of?
Yeah, thanks, David. And thank you all for having us. I think recently, at least for us, to proactively get into the owner-operator side of or at least one of those verticals that we're in, we've actually hired a guy to focus on that, who has turnaround experience, who his sole role here will be to source, identify, and run those operating businesses. So that's one thing that we've sort of changed in the past 6 or 8 months. But otherwise, you know, as Alex said, we go in with a blank sheet of paper or eyes wide open, and we don't have one size fits all. So we're trying to go in with just open-minded. Like, so we'll chase a bankruptcy. One thing we've seen recently is, you know, a Chapter 11 bankruptcy. It can take all sorts of forms. It can go a million different directions. So we'll go in, you know, ideally as an owner and operator, or at least a funding source, and we will build relationships with the parties that be, whether that's an attorney, a turnaround consultant, or the company itself. And we've had some success in the last 12 months of certain situations, you know, and I'll speak to certain situations in Texas, but where we came in, the business was really struggling, oil field business, and we were trying to maybe buy one of the divisions of the business. But as I think we traveled through this course of 6 months, and eventually the company it ended up liquidating, but we ended up funding the business through some tough times where otherwise would have probably liquidated 6 months before. So we're seeing a little bit of a resurgence in the oil field space, especially in the last few weeks here. But other things we've done in Texas specifically, you know, another business owner had bought his building was sold. So he needed to get out of that building, but also keep a service part of his business. It was an HVAC contractor. So we ended up helping him, you know, sort of orderly wind down that business, had a relationship with the landlord, and was able to get him to maximize the proceeds of the machinery and equipment assets in the building, so that he could then move into a smaller space and continue his service business. So those are some things we've done recently, and specifically in Texas.
Mm-hmm. And maybe Barret or Alex, talk us through kind of maybe a liquidation where you feel like you guys added a ton of value or just preserved value, you know, for the owner or owners who probably weren't thrilled about it, but you guys were able to, by starting with a blank sheet of paper or maybe doing some unique stuff, have a stronger outcome than if they would have, you know, than perhaps a competitor or substitute might. might have provided.
Yeah, I think to the scenario I was just speaking of, we were brought in originally by a turnaround group as a potential lender. And unfortunately, the business just wasn't in a place that it could survive. But we came in and said, well, instead of just being, running an auction in 60 days, maybe we can sort of orderly wind this business down. So what we did was sort of a dual path effort of a private liquidation while also setting up for an auction. So the business had a few assets that were worth potentially a lot of money in a private sale, whereas they might not have otherwise sold as well in just a quick 60-day auction. So we were able to sell one or two of those pieces privately because we have a source from our founder over the last 50 years of him being in this business. We're very tied into machinery dealers and inventory people in all different industries, metalworking, plastics, food, textiles, anything. So we're able to find those buyers privately, but also run the auction. And currently, the used machinery market is very strong. It's the supply issues and material issues that are sort of a result of COVID. If you can't get a new piece of machinery for 12 months, the market for auctions and liquidations has been very, very strong. So that situation was, I think we brought some value because we didn't just run an auction in 60 days. It lasted 90 to 120 days. And truthfully, from the attorney who handled that case, she was pleasantly surprised at the values of the machinery. It ended up being 40 or 50% more than she initially had thought.
Mm-hmm. And Barret or Alex, oh, go ahead.
I was going to say one other local example there. We bought out of a Chapter 7 trustee sale in Texas a couple of years back, a business called Kuntz Wagner that made large electrical generator housings. They were fabricating the enclosures and then they were assembling sort of the guts of it. And business fell into a Chapter 7, ceased operations. And we actually bought the whole thing out of the Chapter 7 process. There were two locations, one up in Idaho and one in Houston. And the Idaho location was dissolved. We sold off the assets there, but we were able to keep the Houston business intact and ultimately found a buyer that restarted the operation there. We were actually evaluating the prospects of restarting it, but found another party that was more inclined. So good hybrid scenario where trustee made out fine, secured debt made out fine via our purchase of the assets. And then the assets in Idaho were sold piecemeal through our auction business, but we were able to identify a going concern buyer for the Houston location and effectively restart that business there.
That's really interesting. Alex or Barret, on a wind down or a liquidation, I assume you guys can do a variety of structures. I think some folks would benefit from just hearing a little more about how those are typically structured.
Yeah. And I should say in that scenario that I spoke of, the HVAC contractor in Dallas, he was under a lot of pressure to pay off one lender and make payroll. He was dissolving a lot of the company. We actually we bought the assets. It was a sort of we called it an APA with overage sharing. So we bought the assets, we gave him certainty before any sale of any machinery was done. We sent him the money. We then ran our process. And then because the assets were sold and the market was strong, he ended up getting more money on the backside of that transaction. We shared with him in the overage. That's one structure. Typically that's called a guarantee with overage sharing. We'll actually pay the dollars before the auction or before the sale starts. So there's certainty for the lender or the owner or the landlord, whoever it may be. And then now we're both partners sort of in the overage and we'll share. And usually that sharing is 80-90% in the favor of the owner of the machinery. It's sort of an incentive for us to do well, but the majority of it goes to them. The other way is we can just get hired on a sort of a fee for service basis. It's a commission with a small expense budget, which we do 50 to 60 of those a year. So we know what that expense is going to be. It's marketing cost, it's cost for us to send our folks out there to photograph and lot and organize the machinery and equipment for sale. It's some cost for online service providers and things like that. And then the other way is we'll buy the assets on our own accord and we'll sell them on behalf of ourselves. And so that's a little bit larger of a spread. Obviously, we're also trying to make a margin on those, but sometimes the speed, certainty, and it provides some value. So that does happen, not often in bankruptcy or otherwise distressed situations with a lot of professionals involved, but some people just want out and we'll buy it and move on.
Got it. And just a quick pause for the 6 or 8 folks that have joined in the last 10 or 12 minutes. We're speaking with Big Shoulders Capital, Alex Mazer and Barret Arthur. Big Shoulders has a national presence, both in the liquidation business, the lending business, and more recently in the private equity business. Please post any questions you have in the comments. We're going to keep kind of walking through examples, but if you'd like us to ask anything specifically, please do post them in the chat box. Alex or Barret, maybe we've talked about liquidations, really interesting couple of examples. Talk to us about a note purchase. What's a note purchase for folks that maybe aren't as familiar? How do you typically, find a situation where you're buying a note? Kind of give us a little bit of an overview of that as a solution for a business and some amount of turnaround.
Sure. And so we approach those from both the business side and from the secured creditor side. So a note buy is an opportunity, a mechanism for a secured lender to exit a credit, typically a non-performing credit, that's not necessarily dependent on the borrower to identify a refinancing solution. And so oftentimes, if a bank's particularly fatigued, selling the debt could be the fastest way for them to globally exit the credit. And so we do that, again, opportunistically when that solution makes the most sense. Oftentimes there's a discount relative to the principal balance. And for us, from our underwriting perspective, that's predominantly based on what we think the underlying assets are that support the loan. And buying the debt and stepping into the lender's chair, particularly at a discount, gives us, in conjunction with the debtor, the borrower, a lot of flexibility to navigate sort of the next steps. But it's not always a note sale at par. A couple of years back, there was a Chapter 11 in West Texas for an oil field services business. The bank in this case felt very well secured and had a pretty well drafted sort of relief motion. And we ended up buying that note at par. And so why would we do that? Again, we felt well collateralized. The bank was fairly well in the driver's seat there. And we bought that loan at par. It was secured by 2 parcels of real estate, receivables, and equipment. And the equipment was sold in a public auction, the receivables were collected, and the real estate was sold. So again, in that case, the bank got out at par or number, in other cases, acceptable to them. And then we step into the shoes of the senior lender without the fatigue or whatever else that sort of pre-existed that they had. And so from that chair as senior lender, ideally when there's a discount, it gives us the opportunity to strategize with the borrower. And sometimes we can forbear or amend the loan documents. Other times we can move towards a foreclosure sale. So a lot of flexibility for how we can then take an opportunity in a particular direction via stepping in a note sale.
Let's change gears a little bit, gentlemen, and talk about how COVID has changed your business. I mean, we're at the tail end of the pandemic, hopefully, but how did COVID impact, from your seat, our industry, the turnaround space, and if there were any, new products or kind of more specific solutions that you guys deployed specifically in the last 24 months?
Yeah, so up here in Chicago, COVID is sort of paralyzing. And then I flew down to Dallas last year, and it was like I was the only one talking about COVID or with a mask on. So you guys were ahead of the curve for us down on that front. I'll talk a little bit about how it's impacted our lending business, and Barret can speak to maybe what we've seen in the auction business. The lending business for us was very severely impacted by COVID in the sense that the urgency from the banks that we sort of depend on to feed opportunities was taken off the table. There just wasn't any distress. There were all sorts of accommodations provided for COVID. And then beyond that, all the government stimulus money really provided for companies flush with liquidity. They didn't need our sort of capital, and they were getting relief from the banks. So the lending business for us was sort of way down last year, but we're already seeing uptick of that. I think it's largely companies that have received their government money, spent the government money, and are now in sort of the same position they were maybe before COVID, and with banks a little bit more eager for resolution.
Yeah, and I think to add, what I said earlier, on the liquidation side, it's very difficult to get a truck, a trailer, a piece of construction equipment, or any piece of equipment for that matter. And so our liquidation market has been strong. I've had folks call me and say, I can't believe I'm buying a Hyundai excavator. I only ever buy cat in 40 years, but they'll pay large amounts for something like that because they need it and they can't get it otherwise. So that's one piece. The other piece is another aspect of our sort of PPL business is we buy large scale acquisitions of property, whether that's usually real estate and equipment together. So we've seen some larger corporations that aren't distressed companies, but they have sites or otherwise, facilities that they just don't need anymore for whatever reason. And so we'll buy those. And an example is a paper mill in Pennsylvania, or power plants, or a mining site in northern Minnesota. That's sort of things that have been sitting there or otherwise idled that they were hoping to start up again one day. And COVID sort of made it clear that that's not going to happen, or they don't need it anymore. And we'll come in, one buyer, cash, no financing contingencies, and we'll buy everything. We'll buy the real estate, and it could be environmentally challenged real estate, and all of the equipment. And we'll find a way to sort of sell out of that property, but it could take 2 or 3 years. It's not an auction in 60 days. It could be a series of auctions. It could be private sale. It could be demolition. And now you're in the commodity business now you're trading scrap basically to offset your cost of demolition. And then it's all the way down to sort of property development. So we've seen a few of those as well.
You both have touched on equipment. There's kind of a high demand for equipment, both kind of yellow iron as well as manufacturing equipment. Alex and Barret, is that supply chain specific? Is there kind of any diagnosis on why there's such demand for used equipment?
Yeah, I think so. That's at least what we're hearing. We've heard that, I ordered a brand new truck and it doesn't even come completed. They literally deliver you a truck and it doesn't have all its parts yet. So I think it's supply chain. I think there's some labor constraints, obviously, shipping, logistics is a big thing. I mean, we saw the recent issues in Canada a few weeks ago. So I think it's sort of the combination of the perfect storm of all three of those things that you touched on. Yeah.
In our TMA Central Texas and TMA. Oh, go ahead.
I'm sorry, Dan. I think what's interesting is people are busy. They have work. It's just and I think what Barret touched on is spot on. There's just the concern about lead times, and if there's uncertainty around when they can get assets to fulfill contracts, and you can deliver used equipment today, there's a major value there because it removes all the uncertainty around the supply chain and that sort of disruption. But on top of that, people have a lot of work. The companies that we're talking with are busy, and those that operated well over the last year didn't burn all that PPP and EIDL and tax credit money. It's been a boon to their balance sheet. So they're flush. Business is good. There's a limited capacity, and now there's the perception that it may be tough to go get the equipment that they're otherwise would sort of want to buy in ordinary course. So I think it does create an impetus to buy now when those assets are available.
Yeah, that makes sense. Let's let's pivot a little bit and go forward looking. And no one here has a crystal ball, but Barret and Alex, you guys have any kind of high level predictions for the year where they're going to see more of any one type of distressed activity, or any thoughts on how a potentially rising interest rate environment could, what that could result in for your firm or for our industry in general?
Barrett's got the crystal ball in his office. I'll let him take that one.
There's no crystal ball here, and no one's allowed to write anything down that I say. So, although this is being recorded. So, I think a lot of the information we gather, we're not experts by any means, is coming from our network. And we've actually done a lot of that in COVID in a more efficient way, a lot of Zooms, a lot of phone calls, and, less coffees and FaceTime, which is sad, but we're getting back into that. But a lot of the bankers, a lot of the turnaround consultants that we're interacting with, and it's not just Chicago, we're sort of all over the country. The phone is starting to ring. And I think what I've been told by some lower middle market regional lenders is, end of Q1, when they get the year-end financials in and the reporting finally does come in, I think that's when you'll start to see some workout groups pick up, and some ABL groups are starting to see some pain points. That's what we're hearing. I think we're seeing it. To Alex's point earlier, we are starting to get some phone calls that maybe, that Band-Aid over the PPP money was a Band-Aid, but it might be a much more serious wound underneath there. And so they're back to where they started in 2020. So it is starting to pick up. Specific areas, I'm not sure. We've seen a lot of metals and plastics businesses that maybe are, tier 2, tier 3 sort of suppliers, that, again, the labor shortage, the material shortage, material cost is a big thing. They haven't been able to pass those costs through. And so you've seen some smaller businesses sort of dying because of that. But mostly in those high sort of widget manufacturing businesses, we've seen a lot of. Alex, anything else?
I mean, I had dinner with a friend who's a bankruptcy attorney in Chicago, and she worked 15 hours in December. I mean, she usually works 15 hours in a day. So I think that that world has been slow, but I do think it's picking up. For us, what we see is a little bit industry agnostic, but I think the common thesis that we've started to see that we will see more of is small, privately owned, family-owned businesses, all the way up through sort of on the relatively smaller middle market side of the private equity space, that they got huge amounts of stimulus money, certainly huge as a percentage of sales, and that money has largely been spent. And if that's now been spent, there needs to be another liquidity event. And I think everything that Barret said about supply chain disruption, inflation, increasing interest rates, but a lot of these costs cannot be passed on to their customers. They're either tied into these customers contractually, and they don't have the opportunity to, or there's so much customer concentration, they're scared to sort of be the bad guy, or to Barrett's point, in certain industries like tier 1 automotive suppliers, they're not allowed to make money. So it is a challenge. We just actually was introduced to a small company here in Chicago, 5 brothers on the payroll, a couple of them working there, 40-plus-year-old family business. And they were losing a bunch of money. The bank didn't really notice it until they started to see some financials, to Barrett's point. But this company got huge amounts of stimulus money, PPP, EIDL, and they burned through it all. And we're in a really challenging position. And we'll talk a little bit about what we did for that business, but I think that's going to be the trend. It's going to be retiring business owners that maybe had great years last year because the stimulus money, don't want to deal with the challenges that we're all dealing with now unavoidably, or just, the mismanagement that's sort of always out there that may be increased or exaggerated because of interest rates, inflation, supply chain disruption. And I think they're just, a lot of business owners are not going to be, not going to have the liquidity to sustain it.
Yeah. We've got some good questions coming across. Just an invitation again to type them in the chat, and we'll work them in as we can. Barrett and Alex, you both touched on this in terms of diagnosing the distress. And is there any overwhelming pattern between supply chain issues, commodity prices or inability to pass on those prices, mismanagement, ability to find and maintain labor to execute the work? Is there, I know you guys are generalists and opportunistic, but is there any clear winner of kind of what you're seeing in the distressed businesses that you're speaking with?
I would say, unfortunately, most of it that we see it's pretty distressed, and it's usually mismanagement is a common thread, but I think mismanagement and supply chain are big issues. You have the supply chain and then combat that with mismanagement or just lack thereof. And it's an uphill battle for a smaller, lower middle market company, maybe a family business, to play catch up. You just don't have maybe that level of sophistication to negotiate with suppliers or to pass through pricing. So generally, it's like, I think supply chain and mismanagement are two of the ones that stick out for me.
Yeah, and I think the labor challenge is a big one too. We have a borrower in the scrap business. They operate scrap yards, and he's having to pay truck drivers more today than he ever has. I think he's at $30 an hour or more. And the commodity prices are what the commodity prices are. So and they're good, but just because his cost of goods goes up doesn't necessarily mean that he can pass that along, or at least not instantaneously. So there's margin compression, because I think, to Barrett's point, a lot of the cost of goods, whether it's material price or labor price, are higher than they were before.
And on that point, with Big Shoulders, having a background in auction, having a lending arm, but also having a private equity arm, whenever you're able to make a private equity investment, what's the profile of that? If it's a lot of mismanagement, right? I would imagine that'd be a difficult private equity investment. Maybe I'm wrong. What's kind of the profile where your group is comfortable and even proposing some sort of partnership? Sure.
For us, we look, the first question is, does this business have a reason to exist? And that can largely be driven by top line sales, who their customer base is, do they have a proprietary product line? And so we make that sort of internal assessment. Is there a reason for this business to exist? And if it passes the first test, then we sort of understand what we think we would do if we were in the ownership chair. And oftentimes, these businesses, like the one I just described, with 5 brothers on the payroll, a couple of them working, not very active, engaged management, there's just sort of low-hanging fruit that's available that we sort of anticipate if we're able to buy the business. And we look to that and see how significant that might be. And so it's a little bit sort of figured out on the fly, but the first sniff test that needs to get passed is, does the business have a reason to exist?
Mm-hmm. Another question that recently came across, Barret and Alex, on the equipment side, are you seeing a difference in equipment prices that buyers are willing to pay in different regions of North America, or is it more uniform across most markets? Also, what markets, if any, have you seen more activity in than others?
Yeah, I see that question from Bill. Hey, Bill, hope you're well. Yeah, I think generally we've seen the pricing and the sort of the demand be pretty uniform across the country. When we have an auction, we're marketing it, at a minimum, like a 500-mile radius around the location of the assets. We've had sales in very remote Tennessee. We've had sales in, almost downtown Dallas. And so, no, we've seen the demand and the pricing be high on both of those sales. One was sort of a land clearing excavation company, and one was a HVAC sort of metalworking fab contractor. So We've seen printing machinery is selling well. You know, printing is a different animal because if it's a lot older, it's, you know, like using a VCR instead of like streaming through Netflix. So there's a technological difference there, but for the most part in, you know, trucks and yellow iron and metalworking machinery that hasn't, you know, isn't technologically driven, the prices are strong sort of everywhere. But yeah, I mean, the trucks and trailers are selling for, I mean, most people here probably know used cars, you can't find one. Those are, you know, I think Alex had a sale a few weeks ago. We sold a dump truck with like no engine in it for $17,000 or like something crazy. That normally would have sold for $2,000 or $3,000 for parts. So just people cannot get these things.
Mhm.
Yeah, we see it across the board, David. We had machine tool sales. We had a large sale in outside of Philadelphia, New Jersey, for an aluminum extrusion business that we bought out of a Chapter 11 bankruptcy sale process. Big presses that could take a year and $1 million to move. And people bought those presses and then negotiated with the landlord to leave them there because there's just not enough capacity. And the lead time to go replace that machine would be years. So we're really seeing it across the board. Can't think of an industry that we have not seen, generally speaking, with inflated and strong pricing.
Thank you. In our chapter and probably TMA in general, a lot of bankruptcy lawyers, maybe talk to us about, you know, how you've successfully worked with a bankruptcy lawyer. I'm just wondering about folks in our region picking up the phone and calling for some perspective or advice. Kind of give us a couple of examples of how your group through those solutions can work with bankruptcy lawyers.
Sure, I'll start. I think in our case, we're looking at bankruptcies all over the country, and my biggest thing initially is building a relationship with the attorney and coming in with a blank sheet of paper or eyes wide open, whatever you want to say. And because we're not just going in as a liquidator in a Chapter 11 to go look at the machinery and equipment and, you know, kill the business, you know, we're coming in to say we can be a lender, we can buy the business, own it, run it, and keep your owner, you know, your client in the management chair, because that's not what we want to do. We don't have a bench of, we're not a private equity group with a bench of CEOs that need to go to work. We'd like them to stay in that chair. That's their business, that they should run it. And we'll play a sort of board level strategy, you know, provider, but we're not going to run the business every day. We may give some strength to the CFO chair or something else that may have been lacking earlier or something like that. But yeah, generally it's working with a debtor's counsel is typically that, because we can look at it from a different perspective, some creative solution. Or if it's a secured lender's attorney, it's speed and certainty. If it's a note purchase or something like that, you know, we will go and look, we'll go travel to the business, we'll meet with the ownership group, you know, we will, as we say around here, we'll get on our horse and go and come up with a solution quickly. And we don't need financing. We're not a hedge fund that has investors we have to answer to. So we can make those decisions quickly and efficiently. You know, like Alex booked a flight 2 hours ago to fly in 3 hours to go to a bankruptcy bid off tomorrow in remote Mississippi. We can move quickly. So I think there's some value there generally.
Yeah, I think we engage bankruptcy attorneys to represent us in various parts of the country, including in Dallas and Texas area, on a number of cases, whether they're as we as secured lender or we as a prospective asset buyer. But for us, we spend a lot of time navigating the bankruptcy PACER files, making sure that we're educated on the context of a case, and so that when we do reach out to banks counsel, debtors counsel, committee counsel, whoever the stakeholders are, we are leveraging experience in this landscape, but also being able to ask targeted questions and sort of have targeted discussions around ways in which we think we can be helpful to them based on what we've read in a cash collateral motion or petition or any of the other filed documents.
Talking about Texas, Alex and Barrett, what have you seen more recently in the last 12 or 24 months in oilfield service? Any patterns or any specific solutions that have emerged more frequently?
Actually, a good story. We had an oil field company, some presence in Texas, presence in Oklahoma. They were, it was a bankruptcy. You had a third generation that wanted to own the business. It was heading really quickly towards a liquidation. So PPL ran a liquidation. This is like September of 2020. We ran 2 auction sales, but that was the first auction sale we ran. And Big Shoulders on the side was a lender to a related party, third generation, young kid that wanted to, own a piece of an oil field business, and funded him to be a buyer at that auction. And he bought some equipment at that auction, and we just had an appraisal done like this last week, and the equipment values are going up, and people in our back office are like, what's going on? And well, oil was $0 and now it's $100 a barrel. So we've seen that. It was a good story, good transaction, and it's working out for him and his family, but it's just ebbing and flowing as it always does.
Yeah, we tend to spend time in Texas and West Texas when the prices are low and there's a lot of distress, and all the over leveraged businesses sort of are revealed, but the market's strong, so there's not a lot of that right now. We were a lender to a crude hauling business based in Dallas, but primarily operating in West Texas and Oklahoma, and they refinanced with a traditional bank. I mean, business is I think generally good.
Reminder to participants, we're gonna wrap in about 10 or 15 minutes. If you have any questions, please do chat them across. Kind of a wider question for you both before I turn it back over to Dylan, but Alex and Barrett, any other examples of deals you're working on right now, situations that you're actively involved in, maybe even at the term sheet stage, that you think are particularly interesting or worth sharing a high level overview for folks to better understand the sort of solutions you guys can bring?
Go ahead, Alex.
I can talk about a couple. There's a syndicate of banks that are a lender to a sponsor-owned manufacturing business with a couple of locations. Business is really struggling. Bank does not know what to do. And so how we're approaching them is note buyer. We've made a proposal to buy the debt. We're also awaiting a more formal introduction to the business owner. We think that if there's a combination of things that can happen, we can buy the debt, we can push it into a bankruptcy sale. We think some of the facilities probably liquidate, some of them remain intact, some may be sold to regional players, and we'd be very interested in ending up with at least one of the operations. So there's an interesting sort of combination of things that we do, and sometimes those present themselves. Was just on the phone with a turnaround shop in the Southeast. They've got a client, patriarch of a manufacturing business, passed away. Couple divisions. One is very automotive intensive, getting hammered, losing $1 million a month. And then there's another business without automotive concentration, fabrication business that we'd be really interested in. And the family at this point just wants out entirely. And so, we can be a liquidator of the plant that is just burning cash, if that's where that goes. If it's a receivership or an assignment, and then alternatively, we'd love to sort of evaluate as a prospective buyer for this ongoing fabrication business that doesn't have the automotive concentration or customer concentration. So we're sort of looking at that open-mindedly as well.
And I think the story of one of the companies in Chicago we just looked at a few weeks ago, a consultant came to us, needed another liquidation offer for the machinery and equipment. That's on a Monday. The bank's just going to otherwise collect the receivables, and the five brothers are going to go out of business. Alex goes down there, sees that maybe there is some more to this story, and maybe this business does have a reason to exist. And we send our new guy down who has that experience in turnarounds, and 3 weeks later we're paying the bank off at par, and we're running that business with the brothers, and there was no auction. So that's where it is today, and that's just took place over the course of 3 weeks. So I think that's a good example of just how things can change. We don't like to be a liquidator. It is part of our business, but we try to find if there's more to the story, and in that case there was, and it's a good one. But yeah, otherwise we're working on a few things. There's a big waste hauling business. It's in bankruptcy. We put out a couple LOIs to sort of buy the business and run it. It's sort of living in bankruptcy right now, and we'll eventually sell. And we'll be a buyer there. We'll be a buyer at a minimum of some trucks, and we can liquidate those, but hopefully we'll be a buyer of, at least a few of the locations, and run a waste hauling business with a few partners across the country. So that's just how we're looking at things right now.
That's really helpful. Well, if there's no more questions, we'll pass it over. We want to thank Barret and Alex for their time and their insights. Dylan, over to you.
Yeah, thank you all for presenting, and for Big Shoulders for sharing your expertise with us. As a reminder, this was recorded and will be shared on the website along with our other webinars. And I look forward to seeing you all on the 3rd for our happy hour in San Antonio. See you all there.
Thank you.